Hi everyone, Gerard here, aka Brooklyn Trader, FXLiveDayTrading.com. Doing a video here because I do get a lot of questions regarding futures. How do I trade them? What do I trade? How does it differ from the foreign exchange currency market? And I'll just summarize that today. I'll tell you what I use as far as charting platforms, brokers, things like that, and beyond that, you can do further research on our website. So why don't we start with Forex, okay? Because there's two different ways you could trade Forex. You have spot Forex, and you have the futures Forex. So spot Forex is the actual market of Forex. And that's where you have the major banks that are the market makers, and then you have the brokers that act as a go-between, in between these major banks. Major banks, just off the top of my head, I don't script anything, so just off the top of my head, major banks that trade the foreign exchange currency markets. I believe Citibank is holding that number one spot still. Deutsche Bank is definitely in the top 5. We have, they actually used to have a retail, it was called DBFX, but then when they changed those rules, they weren't able to go ahead and do their retail, and that was in 2012 with Dodd-Frank. Won't get into that, but Citibank did have an FX division for retail that was X'd out as well. Why? Because a lot of rules came into effect 2012, a lot of these major banks had to abandon their retail Forex market. So now what we have is really, if you want to trade spot Forex, you have to do it through a broker, and in the United States, a broker that is approved by the regulatory agency in the United States. And that's why sometimes other countries won't accept you as a client if you are a U.S. citizen, and that's because there's different rules for this country, which I think is complete nonsense, especially the FIFO, first in, first out. That means if you place a trade, you have to close that trade according to the order that you placed it. Absolute ridiculous stupidity. As far as the leverage is concerned, they toned it down. It's 50-1, but futures is 50-1 too, so I can maybe understand the leverage, but that FIFO stuff, that is nothing more, in my opinion, than a tool for the brokers to have more of an edge over the traders, and which is why when you see my account that I'm trading, I'm doing a challenge account, started it last month, okay? We basically want to see if we could take a very small account and what could we do with it over a year. So we hit a little over 30% first month. But you'll see in there, if you analyze it, you will see a lot of trades. And, one may say, well, why the heck is there so many trades? Why? Because I like to scale in and then scale out. But if you're using that FIFO nonsense, you gotta like close the whole position, at least with my broker. So I'll just I'll take like 5 small positions, 4 small positions, move in then move out. So I'm getting off the topic here, but the bottom line is spot Forex is now solely traded in the United States, at least, by retail brokers. So if you want to trade spot Forex, you need to open a retail brokerage account. Can't do it from a bank, at least not in this country, the United States, anymore. So a lot of these banks that do have their retail outfit, there still is a few. I believe DBFX is still available in Europe. I could be wrong, and I believe CityFX does have retail. That's again Europe. So spot Forex, not available via bank, United States. We covered that. You're going to get better spreads when you're trading, for the most part, spot Forex, and you're not going to incur a commission. Okay, so one of the advantage trading spot Forex, you're not going to incur that futures commission. Depending upon your broker, whether it's TD Ameritrade, Interactive Brokers, it could be anywhere between, well, first off, there's E-mini, and then there's the larger contract. So that's going to vary. It could be anywhere between $5 to, $50, depending upon the amount of contracts and how large, whether it's an E-mini or a larger futures Forex contract now. And all the futures contract is doing, it's just mimicking the spot Forex. And they do have wider spreads. So I'm not going to say I don't buy. Futures is very convenient. So let's say you're trading the S&P, okay, E-mini. And you say, I want to keep everything in this account, so let me go ahead and, go long the S&P, and because I think that it's going to be a risk-on day, at the same time, let me go long the Aussie versus the US dollar, and you do it in futures. And it's more of a habit, but definitely you will incur over the long term a lot more fees trading futures. So in essence, futures and spot Forex, are essentially the same. Now, you may see some differences. For example, you may go online and you'll see the euro is, 113.55. And then you look at your futures contract and you're like, why is this E-mini futures contract 113.13? You're like, wait, that's 40 pips difference. What's going on here? Is someone trying to scam me? Well, that just means that depends on the expiration date of that particular futures contract. There is going to be differences. It may not be that extreme like I just said, 35 pips or so, but you're going to see some variations that it's going to depend on the contract. So yeah, that also is a bit confusing. So if you're going to trade Forex often, I would suggest do it in the spot rather than the futures. And as far as futures is concerned, what I like about futures is there's many different things that you can trade. It is in a better tax bracket than stocks, and it falls in the same trading mode if you are a full-time trader. You can indeed I don't want to get too technical when it comes to accounting, but there's definitely tax advantages. So I trade futures, I trade Forex, and excuse me, if I trade futures in stocks, that's also a benefit too. So I try to stay in futures and Forex, but sometimes I will trade stocks as well. So if you are very serious about trading Forex, I would definitely suggest start off with spot, no commission. You can also get better spreads than you would get in futures. Now, if you have already a stock account and you don't want to go through the inconvenience of opening up an account solely for the purpose of trading Forex, and you're like, well, I already have this TD Ameritrade account or Interactive Brokers, and I keep using those because those are really the two big Scotch. I don't even know if Scottrade has it. I'm just going by my accounts. You can say, I don't trade Forex a lot. I just want to go ahead and have the convenience where if I do want to trade the euro dollar, I could just trade it in the future, and that's where the convenience comes in. Essentially, there was a case made by a lot of people where one of the reasons why they eliminated the CFDs in the United States in 2012 was really to give the options market more revenue, because a lot of these brokers were offering these CFDs, which is basically futures, but you can do it through your MT4 and through the same broker that you have for spot. And it was very convenient, and the futures exchanges were losing a ton of money. So that was also very convenient for them to say, hey, you can't trade CFDs in the same account that you want to trade Forex. And that was basically a rule. And now if you open up an account in the United States, is solely would just be Forex, and you wouldn't, quote, trade the CFDs like you can do in Europe, which I think is a lot more fair. So what I do when I go ahead and, excuse me, I didn't mean to just jump off. Now let's just talk about charts in general. Okay, what I do when it comes to trading charts is I will get a broker that has the CFDs in it. Okay, unfortunately in my case I will, because I'd like to just stick with the MT4, and I will use that broker. It will be a demo account because with the CFDs you can't have a live account and see them, and so basically I will then have my demo account. I'll look to see where the S&P is doing, oil, whatever I'm trading, gold, and I will use that account, and then I will place the trade on my Interactive Brokers platform or my TD Ameritrade. But using the same platform I see as a big advantage, and that would be the MT4. But for those of you who do not live in the United States and have the luxury of trading the CFDs along with spot Forex all in one account, I think that's excellent, and I would say utilize those together because that's a very convenient way to go ahead and trade. So go to the website, and there is on the page where I have the brokers that I use, you will see FX Primos. You'll see the broker, and I use the demo account out of that. They're also a very good broker. They have been around, boy, I've been trading now spot Forex for over 10 years. They have been around, I think, about 15, very well. In short, up to $2.5 million in euro currency. So good broker. I see a lot of videos sometimes on the web, and I see these fly-by-night brokers that these guys are recommending, and I just feel sad for some of those people who are going to open accounts, and you may have one of these brokers shutting down, and I've been there before. A lot of people have, and there's just no way to get that money back. So make sure you do your research on a good broker. There is some good brokers in the United States, and you can read about that on that page at fxlivedaytrading.com. I will put the link below. And I hope this helps at least to differentiate, spot from futures, and give a little bit of a background on, the tools that I use to go ahead and capture the best of both worlds, get some future trading in, as well as take advantage of some of these wonderful Forex moves that we've seen over the course of the last few months. Everybody have a good one. I'll be making more videos, and I wish you the best in trading this week. Take care, everybody.